Hello, I'm Tim Beggins, president of Elk Trading Company. And natural gas weekly recap today. Natural gas prices are up 4% to 333.20 for the January natural gas contract. Having come back from the Thanksgiving Day holiday, weather forecasts are showing more intrusions of cold air into the natural gas consuming regions of the United States. Let's take a look at the daily chart. Today, gas prices are pushing back up to 333 and a half right now. And this is almost taking back at least 50% of that big drop we saw on Wednesday. Our first pivot resistance level will be 338.60, and our support level will be down below at 310 and a half. Looking at the weekly chart, natural gas prices, having a key reversal back on November the 4th, have continued their march higher, but they're still capped below our pivot resistance point at 366.70. We'll look to see if we can get a positive settlement today and hopefully actually take back most of the losses we saw earlier in the week. Taking a look at the weather in the United States looks like we're going to have another Arctic intrusion coming in on December the 3rd, which is going to dip all the way down into the southern part of the United States, which is going to prompt some very heavy natural gas demand. Again, another intrusion starts in on Friday into Saturday, mostly for the Northeast and Great Lakes region. But here comes the big one potentially on the models. Next Wednesday following, that would be around the 10th or 11th, we'll look to see Arctic air start to dip into the Dakotas and make their way over into Wisconsin, Chicago, and parts of New England. Looking at Europe, the Europeans look like they're going to be fairly mild through this 2 week period, but Asia is a little different. Colder weather is starting to intrude into the Beijing capital city area, which should prompt heavy load from the Russian pipeline gas system, which will prompt more LNG imports into southern China. Taking a look at some of the stocks for the oil and gas E&P region, we look to see that TPL, Texas Pacific Land, continues to march higher, followed by some strong upswings from Woodside, EQT, Oxy, EOG, and ConocoPhillips. Highlighting TPL, Texas Pacific Land Corporation, this has been a strong uptrend since basically late September, September 20th, where we saw a crossover of the 9 and 21-day moving averages. The RSI continues to support, or relative strength index continues to support this move. Taking a look now at the midstream companies, we see that there's still some strong movement here as well, including Energy Transfer up over 2.16%. Highlighting Energy Transfer, this is the weekly chart. And what we notice here is that prices are now scaling back up to the highs we've seen going all the way back into 2016. We'll look to see if this can be sustained, but the RSI, as noted here below, is signaling an overbought situation. So we have to be a little cautious going forward. As always, please tell us your thoughts and hit the like and subscribe button below. Thanks for listening. We'll see you soon.